Joining us now for tonight's big close-up is Kevin O'Leary, the chairman of O'Leary Ventures. He's also starring in the new film Marty Supreme. Kevin, thanks so much for joining us tonight. We're excited to talk about that movie, but first we want to get into the economy. All right, I think it's always a mistake when either party tells people that things are better than they think they are. It's usually a mistake to do that. We saw it with Bidenomics, then the whole inflation was transitory thing. But it feels like things are getting better if you look at the numbers. Who's right and who's wrong here? And do you think 2026 is going to be this hallmark year that the administration is saying it's going to be?
Well, every administration job owns the economy is a very famous line in politics. It's all about the economy, stupid, and it always will be. But what happened recently, we had 43 days of government shutdown, so the data got a little wonky. People were anticipating what the GDP number would be. Now remember, GDP, gross domestic product, reads two things. Number one is how productive is the economy and how fast is it growing? And why you care about that, it doesn't matter where you are in America, is 50% of every dollar around the world comes to America to invest in it because it is the strongest economy on earth. And so this number really matters. It comes out north of 4%, a mind blower, because first of all, we had the wonky data from the lack of 43 days of information, but that's a big, big upside. And so that's really great. No question about it. And the administration will tout that number. And believe me, nobody anticipated it being that big. However, there's a few issues that you're going to hear some criticism about because we're going into, in 2 weeks, the midterms. I mean, let's talk about it. You know, that's what happens in politics. Now we're going to be looking at all the debates around what matters in the midterms. The economy matters a lot. So does affordability. It's a concept. And healthcare. These are big issues. Now, the one thing that is a little bit of a nuisance right now for everybody on a bipartisan basis, inflation's still up there, and it's not going down fast enough. And part of that problem is we got to fine-tune the tariffs. Countries like India, huge market for trading, and countries like Canada with a lot of input things like potash and bauxite that we don't have enough of in America, we're tariffing those and we don't make them. So we've got to kind of fine-tune that a bit and get that inflation down. But right now, this administration has a pretty good scorecard on that GDP number. Wowie zowie, kids, that was a huge number.
Kevin, I don't want to get into economic theory, but Newsweek put this piece out. They called it the Great Decoupling. They said that we see this phenomena in our economy where the GDP grew, but jobs did not. They stayed kind of flat. And it's rare that you'll have that much growth without job growth as well. They point to things like investment in AI and basically tertiary spending from the middle and upper class. But, you know, looking down the road, is it the thing where jobs will catch up to that? Like, say something like AI. People are investing a lot of money in it now. Eventually, jobs will come from it. What are your thoughts on that?
Well, AI is really interesting because it affects all 11 sectors of the economy. And we're probably only in the first or second inning. There's only 50,000 jobs being debated in terms of them being lost to AI. But I'd argue that it's the same narrative we had decades ago when we said television would replace radio. Everybody loathes change, but AI is a very powerful, productive tool for both margin enhancement in the S&P, which you're starting to see, which is good. That's a reading of the economy, the S&P 500, but also for productivity. And so these jobs are being shifted. I mean, I think you'd rather be doing something that pays you 3 times more if you're being trained on AI than flipping hamburgers. So there's going to be robotics and automation and taxis and burger flipping and pizza making and everything else. Blame it on AI, but the economy itself is looking forward and thinking this is a good thing. There is some disruption, but the reason the American economy continues to have this productivity and GDP numbers like this may be 20%, 15, maybe a little bit more, really assigned to AI, and that's a good thing. As long as the Chinese don't beat us on power, and that's another fight we have to look forward to in the next 2 years.
Kevin, you mentioned affordability. People are still upset that prices are too high, and I don't blame them after 4 years of Joe Biden's inflation crisis. But what should Trump do next year to bring those costs down, not just the inflation rates, but, you know, to deflate them and bring them back to where they were, even to pre-2020 levels?
Well, the first thing that can be done very quickly, and he can do this, is look at every tariff placed on every product that we don't make ourselves. So could that be a banana? Could that be a pineapple? Could that be potash? Could that be bauxite for aluminum? Whatever it is, put a moratorium, tariffs to zero on that, and immediately those input costs go down and give you some relief almost immediately within 90 days to this inflated cost. That could include protein. It could include food goods that are imported from other countries that are being tariffed right now. It's a fine-tuning that has to be applied. And now's the time to do it, because you really want to go into the midterms, which is only months away, with those costs coming down. People look at what's on the kitchen table. They look at their average cost of living, and those things are measured every single day, and that's why you want to get those out of the way. It's a political, but also an economic situation, some of it caused by tariffs. Fine-tuning will solve this problem.
Click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis. You won't get it anywhere else.